Vincenzo's Gold Crypto Investing this March the 1st, 2025. Daily cryptocurrency, XRP, and blockchain technology video that you've come to expect, love, need, and deserve on this 2:54 p.m. update on this first day of meteorological and crystal clear blue skies. Sunny day here outside the studio just north of downtown Detroit under current chilly conditions of 21 degrees. We ask you to bell notification, comment down below, like the channel, and share to get that information and truth you need to navigate these manipulated waters. And if we start off real quick with the Bitcoin price, you can see we did have the big flush down to the 50-day, just above the 50-day moving average in the daily time frame. And that did meet a technical target that we were talking about. And if you want to see a deeper dive on this, look at the video I released, the last video last night. You can see right here we had our M topping neckline or mountain double topping reversal pattern. And a technical target would be from the top of the head to the neckline to the point of a breakout. And that's what that arrow is right there. And you can see we almost hit that beautifully dead on with that wick low yesterday at 78,285.98. Or was that yesterday? Yeah, that was yesterday, February the 28th. And then we talked about maybe a potential bounce back as this bearish cross continues to form. And you can watch what those technical signs are on the video. I broke this all down yesterday. You can see the 100-day moving average is at 93,000 and change. The 50-day or the short term is at 95,000. And we talked about in last night's video how you could get a short bounce back after meeting that technical target right here, where you could bounce back and come up either to the 200-day moving average in the daily time frame or up to this 90,000 blue major resistance marker. And then that would force the price down to the next underneath target of 74,149.89. So that's what we're watching out for this weekend. And this to me is a telegraphed bounce back, a textbook bounce back after meeting a technical target. And if we break this down into the hour time frame, you can see that even better after we hit that quick bottom. We're reversed after the target was hit. And now we could be coming up to this $90,000 level, which is a major upper resistance. And that's where we would look for our next rejection as this bearish cross takes effect. We're only about $2,000 away or a couple of days away from the bearish cross. Bitcoin dominance, you can see, has been coming down ever since it had its second rally back up after its big blow off top to 64.37%. We had a consolidation. Then we ran heavy back up to about 62.34% dominance. Now in the last few days, we've come down a little bit, and we do know that's inversely correlated, where when it goes up, altcoins go down. When dominance goes down, altcoins go up. And if we look at XLM, it hit off this 25-cent level where we told you there would be a double bottom. We drew out last night, or 2 nights ago, on a potential pattern. If we go into the daily time frame as this bearish cross is getting very, very close to happening. We'll see if the markers change. No, they change on the daily markers. You can see that bearish cross is going to change. We hit off that double bottom from the wick low that we telegraphed after this wick down to the 200 and a bounce back. We said it would have to come down to this 25 cents, and it came down exactly to that 25 cents J. And now we're bouncing back up. And we said that if you bounce back up, a likely area of resistance would be this 100-day moving average at 34 cents. Or if it took a few days longer, it would be after it had the bearish cross. And if we look at the hour time frame, the bearish cross is still about a day or two away from happening. So the 34 cents is your major upper resistance if it does it today or tomorrow. But if it does it in a few days, at the end of the first week of March, like next weekend, you'd be late this next week or next weekend, you'd be looking at it more at the 32-cent level. And then that could drive you down to approximately on that flush, 21 cents before a quick bounce back. But then you would get rejected by the down sloping 100-day moving average, and that could force you down to 18 cents. And that's what we're watching out for in XLM. But it is up 6.86% today after the big down day and hit down to that technical target that old Vincenzo told you about. If we look at XRP, it's the same thing. We hit the neckline, and we were telling you yesterday that this neckline could have a bounce back up potentially as high as to $2.51 level. If we zoom back out into the daily time frame, you can see the pattern that we're in is the head and shoulders topping reversal pattern over here in yellow that we diagnosed, sniffed out, and detected for you out of the field. And now the rest of the YouTube channels and mainstream media are showing you this. But old Vincenzo diagnosed this out back here in early to mid-January when the price was only about right there, coming off its 340 high. And we said that we had a potential for this left shoulder, still don't want to buy you. And we drew it out, and we kept it on here ever since. And we talked about yesterday, after we had this retest of the neckline, that doesn't mean you have to break down, but you could come back up to keep building this right shoulder and potentially come as high as 251 before the next flush down would bring you down to this 200-day moving average in the daily, which would be $1.79. And then we speculated after the technical breakdown, and we hit our targeted move from the top of the head to the neckline to the point of a breakout is this arrow at $1.29. That could be the formation or a local bottom of a multi-year starting from 2024 and going through the end of 2025. It would go farther than this, but this is just where we drew it out. And coming into maybe 2026 or the end of the year, where we have a big flush after we break down, come down to about this $1.17 mark, and then have a massive pump back and form another double top, which would be a true macro time frame double top. You have top one, top two, and then that could form a Bart Simpson pattern, which started down here at 49 cents, and that could bring you maybe at the end of the year or early next year all the way back down through this pattern, just like the other three massive pumps in XRP have done. This is all speculation, doesn't mean it's going to happen, but you could see sometime at the end of 25 or beginning of 26 that you're all the way into a full lateral move back down to where you started into this blue resistance box and support box. But this in blue is all speculation and something that we're laying out the framework, reading some tea leaves and showing you potential things that could happen before anybody in the mainstream or in social media gets onto it. We try to inform you first to give you that first mover advantage, which is very, very important to make money. You want to know things before the masses do. Once the masses know, like right here, the masses seen it pump, that's not the time to buy. You want to see things before the masses and ride the waves, and then you jump on or off after the masses figure it out, after the TV and the mainstream and the social media sphere is promoting it to no end, because then the gig is up, the jig is up, and the secret is out, and the time to make that quick, big money is over. So this in blue is speculation, but something that I feel we're going to need to watch as this head and shoulders topping out short to medium term reversal pattern plays out and does eventually hit that target at $1.29. AMP has had one of the bigger bounce backs today. It's been up about 11 to 15%. It's a prototypical bounce back. I wouldn't get too excited until you would break over this 0.00738 level. But you can see now we've had this massive bearish cross, and we're about to have the golden bearish cross as the 50-day moving average is now underneath the 100-day moving average, which is sitting at about 0.00624, and 50-day is sitting exactly on top of the 100-day moving average. You see that? They're both sitting on top of each other, where the 100-day is sitting up there. And by tomorrow, we're going to have a golden bearish cross, which is a lagging indicator because the price has moved down so much, and now the bearish cross would happen. And oftentimes after the golden bearish cross or a golden bullish cross happens, a reversal happens because the indicators and the moving averages lag the price, but it gives you signals of what could be going on. Like when they started turning here, it let us know that it was probably going to drive down quicker and more deeply and substantially. But we did have this wick high locally today up to 0.0056. And now if you want to try to build this and substantiate it a little bit more, you want to hold support up here on this 0.0054 and then try to work your way back up into this region all the way up here at the 0.00738, as this one has been hit down some of the hardest from its regional high back here in early December, and a wick low of about 70%. So it's been hit the hardest. So I could see a nice rally happen, just like we've seen rallies the last two times we've come down. We've had nice rallies to follow through on it, and I could definitely see that happen. We can see we have a technical target on this head and shoulders topping out reversal pattern at 0.042 cents in XDC. We're still on the neckline. We could bounce back up to the 50-day moving average or the 100-day moving average, because the 100-day is still running parallel. The 200-day is starting to run parallel. So we don't have to break this neckline yet in XDC, but I think it eventually will as we get a bearish cross. Still don't want to buy you. Just like we've seen the bearish cross, the golden bearish cross in an AMP. I still think that's on the table. ZIL, I'm very bearish on ZIL. The pump wave could come in, but this thing is very, very low. Algo, it could be due for a prototypical bounce back here, as we have had the bearish cross with the 50 underneath the 100. The 200 is slightly downtrending, but we're at a major support level. So I could see a bounce back locally in the short term up to 27 cents, but I eventually think we're coming down to 17 cents in XLM. DGB is another one that the audience loves. You can see we have this head and shoulders topping out reversal pattern again that we diagnosed out of the field right here and gave you the heads up that we were coming down to this 0.0058. We got very close on a wick down to it back here on the February 1st, February 3rd area. And then we told you we were going to get rejected most likely at the 0.00844 level, or at the time, the 200-day moving average in the daily, and that would bring you down to this 0.00588 technical target, and that is where we're going. Velo is another one that I took a lot of flack from when the price was up here, because they said I was the only one bearish on Velo, but I told you we were in this rising wedge, and if you couldn't confirm that breakout to the upside, you were coming all the way back down to lower support, something that you've done 3 or 4 times over the last several years, because this pattern stems all the way back to late 2023, and you can see you've hit support down here in December of 22, then you hit resistance in February of 23, then you rode up support from August of 23 all the way until March of 24, so almost a year long. Then you hit resistance at 24 in May, then you bounced off through the summertime of 24 on support, and then at the end of 24 into the beginning of 25, you hit major resistance again, where this was brought to my attention, and then we showed you what was likely to happen with this pattern. We have had the bearish cross in this too. We can take that off now that we have hit the underneath support. We've had the bearish cross that we were warning about in this coin too. At 20 cents is the 50, and the 200 is just above it at about 21 cents. There will be a golden bearish cross. We could try to bounce off of here, but a rising wedge pattern is often a bullish continuation pattern, but a bearish reversal pattern at the top of it. And Matic, we have a VINCENZO'S predicts a new all-time low, and this was made a few years ago when the price was nearing its all-time high, and we said this one would go down. And when this was brought back to my attention, we have massive 17 cent low that could be hit here if this doesn't get another quick bounce back like we've had during this whole collapse. And we made that price prediction back here when everybody had Matic hysteria, when the YouTube shysters were promoting it. But you can see we've had several nice rallies, bear market rally 1, bear market rally 2, bear market rally 3. Could we have a bear market rally 4? Absolutely. But would I expect it to last? No, I would not. And I would expect it to have a bigger sell-off than the preceding pump. Like, subscribe, and share. Peace and love.